Well, nobody knows what the news is going to be before it comes out, except for, the super elites in the ivory towers that we are not, right? So ISM manufacturing PMIs, here's a better question. How do we react to these numbers, right? We don't know what they're going to be, but if you're talking about the dollar, gold, stocks, etc., the forecast is for a 48.2 print on the manufacturing PMI numbers. The way we calculate it in the Edge Finder, we track this data like we do with everything else. Manufacturing PMIs are this column right here. So manufacturing PMIs last time around were upbeat. They were better than expected. And that gave us bullish readings in that category for oil, for the dollar Swiss, right? Because US dollar, the NASDAQ as well, right? Bitcoin as an upbeat economy is generally speaking better for Bitcoin. Just brighter days are better for Bitcoin. Bitcoin's a really sensitive asset to recession, to inflation spiking, etc. So we want to see more of that. We want to see the manufacturing PMI number come out today better than expected for those assets to perform, the dollar to be strong, for stocks to do okay. Generally speaking, that is how we calculate the Edge Finder with manufacturing PMIs. Now, what is manufacturing PMIs, you might ask? Manufacturing PMI numbers are basically a survey out to the manufacturing part of our economy, to the purchasing managers within the manufacturing part of the economy. It asks them questions like, do you see sale orders coming in strong in the next couple of months? Do you see, the desire to hire very strong within your company? And you survey, you aggregate all of that information together to get this PMI number. A number above 50 shows expansion in that part of the economy, and a number below 50 shows contraction. We've been in a contraction. Let's pull up. Let's understand PMIs, right? Rather than just say, hey, are we buying or selling gold, right? That is, I'm going to tell you right now, that's not how we make money in the markets, right? We can't just gut call, oh, gold's going to shoot up or shoot down, right? That's not how we do it. We look at what the data is coming out for these figures. We understand these figures. And, hey, if you get a really strong, let's say we get a 50 print on PMI numbers today, that'd be a surprise to the upside. That would be strong for the dollar. That would be strong for US economy, probably weak for gold, right? So we want to understand these things rather than just, hey, there's a red folder, right? Think about the monkey brain that this statement is. There's a red folder. Do we buy gold? Do we sell gold? And I'm not trying to pick on anyone who has felt this way, because it's pretty natural for like beginners to be like, hey, is this going to make gold go up or down? But what I'd urge you to consider is this stuff is complicated. Markets are very difficult, they're complex, and there's brilliant people who study these numbers to forecast these numbers, what they mean for the economy, what they mean on certain assets. So we want to understand the catalyst here, not just, oh, it's a red folder, price go up or down, right? That's some monkey brain stuff, right? Dave liked that one. I know I'm being a goober, but it's just re-engineering the way you think. I think it's a big pet peeve is when people just call this like, oh, it's just a red folder event. They just know like this could make the market move. I have no idea why. Let's understand why, right? Let's actually, maybe a New Year's resolution for people out there could be, let's understand all of the red folders on Forex Factory for what they actually mean and how they actually impact markets. Let's understand what that is. Who are the forecasters? Oh, Mill, that's a good question. JP Morgan, Goldman Sachs, they have entire floors of intelligent PhDs building systems to forecast this stuff. That's why markets are hard, right? Markets are difficult because you're going up against those guys. They are trading price in the direction they think it's going to go well ahead of time. So that's why markets are very difficult to try and just for the average person to come in and beat them, right? You're going up against some really smart people out there. Can you still make money in the markets? Absolutely. But it's not easy. Got to be disciplined, got to manage risk well, and you got to understand what you're looking at. So for me, with manufacturing PMI numbers, we're looking for a number above 48.2 as a strength factor, right? Especially if you get like a 48.5, that would be a nice solid beat. 48, 0.7, right? If you get those kinds of numbers, those look good. If you get like a 48.0, 48 flat or 47.9, that would show more material weakening in the PMI numbers here. The outlook for the manufacturing part of the economy would be weaker. So we want to understand that stuff, right? What's your bias for gold PMI news today? I am very neutral on gold. I just discussed gold in depth. Basically, economic data points look pretty solid right now. COT looks pretty, economic data looks solid. That's bearish for gold from the US. At the same time, geopolitics are still a risk. Inflation's still kind of cooling overall. So I'm just very neutral on gold. I just don't really see a strong directional bias at this time. So not going to trade it. There's nothing for me to do on gold.
The Edge Finder is the #1 trading tool for 2025. The Edge Finder is constantly scanning for new data and information to give you the advantage when it comes to trading your favorite assets. Easily stay up to date with the latest sentiment, technical, and economic data, all within the Edge Finder. The Edge Finder scores on 12 different metrics to give an overall bullish or bearish bias, so you can have more confidence when you're ready to take a trade. The Edge Finder is a one-time payment, which means all future updates and improvements come 100% free of charge. Start your new year off right and upgrade your trading with the Edge Finder.
NASDAQ looking strong into the open. Look at that Russell completely reversed. Curious to see what happens there. With this figure, should drop any second now. Okay, so stock slightly reacted negatively to that. Bitcoin also. Oil slightly up. Dollar index slightly up. Let's see what we got. 49.3, better than expected, both on the manufacturing PMI numbers and manufacturing prices a little bit higher. So a little bit of potential inflation concerns, but also some strength in the manufacturing PMI numbers. Actually, that's quite a good beat. So yeah, that's going to keep us here on the Edge Finder. Going to keep us at a +1 here, +2 on dollar Swiss. NASDAQ +1. Bitcoin should stay intact. So a lot of these scores are going to stay intact here. These bearish readings on PMI numbers for currency crosses should remain strong to the downside, right? Favoring the US dollar, because that is, of course, a beat on manufacturing PMIs. Okay, so that should be supportive of the US dollar. So we don't see a huge move, but again, we're not seeing a big loss either. Dollar index is quite up overall. Stock market's pretty flat. You know, these numbers, the PMI numbers are, there's a lot of like ifs and buts when it comes to indices and PMI numbers. If the economy is like, if the stock market's like really scared about inflation, they don't want to see hot PMI numbers. But in most cases, they do want to see strong PMI numbers because it just shows good outlook for the economy and for company growth. If you have, services and manufacturing, purchasing managers indicating that they see strength coming for the economy. So I still like stocks long. Little bit of a pop here for the dollar. Nothing crazy. Oil continuing to look pretty solid. Bitcoin completely flat for the day. Let's go back and continue our. So euro dollar was one that I was looking at for possible short setups. Pound dollar, same story here. Looking for pullbacks with a short bias on the pound dollar. What else do we have? Pound dollar, euro dollar, Kiwi dollar, and the Australian dollar. Let's take a look at those just out of curiosity as well. Look at this. Your Australian dollar has been crazy bearish here. This has been a really powerful downtrend. This one it's hard for me because there's not even we haven't even really been able to find an area of support going back until like October, right? Found support here, but then we've just kind of trended powerfully to the downside. I don't love that chart. It's not as clear of a setup for me, just on a technical basis. Kiwi dollar, kind of same thing. I'd have to wait for like pullbacks up into regions like this and this, because this is looking a little bit more oversold than the other ones. But I do still like, I mean, this has been an incredible bearish call from the edge finder. Dollar bullishness in general from the edge finder has been very accurate. Same thing with the dollar CAD setup. Let's look at dollar CAD. Like, look at dollar CAD. That's been a beautiful, beautiful call. I wish I was in it. I'm not in it, but I mean, look at dollar CAD. Looks primed to just continue. We'll see if that's it could find a top here and start to reverse, but I think path of least resistance, in my personal opinion, based on the data that I see, is going to be dollar CAD looks continued bullish. Again, this thing's just been a monster uptrend. The dollar's looking so strong on a fundamental basis. Until that changes, right? Got to be kind of just acknowledging what we see. Actually, this is looking great. I shorted calls on Apple because I saw something. I saw something that I really liked. So I shorted calls on Apple, 250 calls. Now, why did I do that? It's because I don't like the valuation on Apple. So check this out. What you're looking at is a new stock box feature. And if you're an Edgefinder user already and you don't have the stock box, if you're a stock person, you may want to consider it. We've been working overtime like crazy on this thing to get it up to speed. It's got a long ways to go, but it is currently priced very low. We do intend to raise the price over time, but the stock box is a really powerful tool for stock traders, basically. But check this out. So Apple is, of course, everybody knows what Apple is, but Apple's valuation right now is really extreme in my personal view. I think that, the Apple historically has had PEs in the mid to upper 20s, right? Now, what is a PE? It's price of the stock relative to its earnings. So the price to earnings has been mid to high 20s for Apple, right? Let's say like this is kind of like historically where it's valued. Look at where it's valued right now. It's valued up near 40. So what's the point? Well, if Apple is valued very richly, I'm not going to dispute that Apple is a remarkable company. I use their products. They're wonderful. I have nothing against Apple, but I think that the price of Apple is too high. And it doesn't mean that it can't go higher and that I could be wrong about this idea because, valuation is tricky. But here's something about Apple that I am not super impressed with. Their revenue in this period where lots of companies are growing their revenue massively has actually kind of stayed flat, right? The Apple story is obviously an incredible one over the last decades, but recently has really slowed in revenue growth, and net income is pretty unchanged. Stocks are all about like their ability to grow income, right? They're supposed, that's what a stock is supposed to be. It's supposed to be a business that's growing and income is going up, revenues going up, right? I don't love the story for Apple at these levels. I love the story for Apple. I'm not a hater of the stock. Like, don't construe me in your mind as this big bearish hates Apple guy. I'm not. But I looked at this stock price ripping up like this and I said, look, in my portfolio, I have a lot of long positions, but let's hedge. So when you hedge in the market, you could do lots of different things. You could, go long something that you're short on over here or etc. Basically, one of the hedges that I put on was a short call at 250 for Apple. And I got paid a premium to do that. And it is essentially a bearish bet on Apple. That bearish bet is actually doing quite well with the recent sell-off in Apple, right? You could take a look at my sell call position, which is up nicely, right? So that's the idea, is even though I am very bullish on the markets overall, I can still pick some hedges within that. Areas that I don't like as much. That is where the stock box comes in. Stock box helped me spot that idea. Now, let me be fair. I also did a play on Nike that's not starting out well. So I actually shorted. Let me also be fair. When I show you a winner, let me also show you something that's not as pretty. Nike, I shorted puts on this one, and the stock has continued to drop, meaning I could get assigned and my short puts are currently down. So why did I choose Nike? Well, the exact opposite reason for Apple. Like, if we go take a look at the PE ratio of Nike, right, price to earnings, it's valued a lot less than it has been in recent years. And I think that there's a potential that you get the bounce back play in Nike in 2025. Could be wrong, could be right. But I like the odds. I like the risk to reward.
I think that I've said it for the last several months. I mean, since we had that squeeze on the dollar and we didn't stop, it's like the dollar's probably going to be the strongest play moving forward. I mean, and the crappy part is it already feels like, well, I missed the move. Well, you did. You kind of missed this squeeze. You kind of missed the add-on trade. You missed the sweep of these highs. I mean, I think that if the dollar does not turn aggressively here, that this dollar is going to be in open space to buy the dips and trying to go after these highs here. I really think the dollar can make its run to 114.15. I still don't want to call the top on the dollar, but I'm way more interested in like a larger macro sell on the dollar. Okay, and again, if the dollar gets stronger, it's going to be really disruptive for the Forex market because we're going to see some really stubborn, irrational trends, and also we're going to see some. I mean, we'll see like 1,000 to 1,500 pip moves. We'll see 2,000 pip moves from high to low, or low to high. Like, it'll be a huge move, right? So how's my dollar CAD? It's getting closer. Come on, dollar CAD, you can get there. So I'm only about 30 pips away from my profit target, and my dollar Swiss, I'm about 100 pips away from my profit target. So looking to close in on those for some profit. Aussie dollar, I'm still keeping it very small. The dollar cost average into this one. New Zealand dollar, still looking at dollar cost average into this one. Euro dollar, still making fresh lows. This is a trade that if you fade, if this pulls back, look for a trend line break, look to fade euro dollar. I think this is going to parity. So, if you want to get into the smaller time frames, just watch the higher time frames, because we could have like a pullback here. We could run some levels but then fade. But I think parity is probably going to happen. We already hit it back in 2022. We could go through parity by several hundred pips. I'd be willing to take the trade off of that or lower, but I think until then, if we get any type of pullbacks here, I think this structure low would be a good spot to look to sell. Trade there, pulls back again, trade there, stop loss kind of above this 105, 106 zone, get myself a little bit of wiggle room to get some entries, and then see if this dollar continues to go lower. So euro dollar goes lower, dollar gets stronger, and just stay with this overall trend. Okay, New Zealand Swiss, all the Swiss pairs I'm still holding long. That's still my trade. I'm still long. So I'm holding long. It's positive swap. It's obviously technically needs a little bit of work. Hopefully this is going to, if this is like push down, pull back, push down, pull back, push down, there's a potential bottoming right there with that flash crash low from August 5th. I would look at that as a strong support level to kind of work its way back up into the center high. That would be that's like the exact same trade as dollar Swiss. The difference is dollar Swiss is now, after hitting this low, dollar Swiss is almost back up to the same high. So dollar Swiss is almost to my profit target. New Zealand Swiss, if this heads down a little bit lower towards this flash crash bottom, if we hit that level, I would love to add more positions on my New Zealand Swiss, which I already have positions in. I did a lot of averaging in here, and I did a lot of averaging in on, let's see, I did a lot of averaging in, trying to think where. As this was falling, averaged in. We had our flash crash low, had some profit, didn't take any profit on that, waiting for a trend line to break. So I'm just dollar cost averaging in. But point is, if we come back down to revisit this level, this would be the center high that I want to go after. So if I can stack some more trades over here, so I'd want to wait for price to come back and find this low, and then stack some buy stop orders, and if price goes up, that's my profit target. So I can turn most of these trades into profit. Not all of them, but most of them. I was trying to go after 6,000 when I started this positioning. So I had an equal low there, had a trend line break there, started to stack in some orders. So I've taken this thing up for some profit, but unfortunately didn't take a lot of profit. And then I got back in at this low, flash crash, and then on this trend line break, I'm still kind of waiting. Okay, so if we end up getting more trades, I'll add in over here and start stacking back in towards 53.50. There's a measure move. We can get all the way back to like 56. But patience on the trade. For me, patience. Okay. Yen pairs. I think if you've heard me in the last 10 years of trading, 15 years of trading Forex, and probably 10 years of teaching others, you'll probably hear me say I don't like the yen at all. So I'm not trading the yen. I don't care what the yen does. I don't care what the Japanese yen does. I don't care what the Bank of Japan does. I don't care what the dollar yen does. I think the yen is the silliest currency pair to trade unless you are following what you see. So stick with a direction, stick with the 4 hour, 1 hour alignments, trade what you see. Don't fight the flow of the yen. Don't be a hero. Don't call the top. I have no idea what the yen wants to do. Okay, right now, okay, euro yen, it's just a giant range. We had that huge disruptive move from high to low, and I could see this still being a huge channel. So is there a channel in here to trade? Yes, no, maybe. Okay, that is not going to be fun or pleasant. I'm not going to take the trade. I said this for the last probably 3 months. The only way I'm going to trade Japanese yen is through the Japanese yen futures, because I can do define risk, not get my stop losses hunted, not play with interventions from the Bank of Japan, and just put in a risk that's hopefully favorable reward to risk. So 6J is going to be the way that I trade it. Okay. And what I'm wanting to see is, will this come back down to a level that is a kind of no-brainer risk-defined trade? Yes, no, maybe. So I will probably go out as far as I can in the Japanese yen futures contracts. I did this where I can get about 125 to 150% return on capital. So I get a little asymmetry to the defined risk side. If it goes through it, then I just risk defined. It's like I'm risking $250 to make $350 per contract. So would I step it up to make $550 of risk to make $750 to $800 of profit? Yeah, that's about my wheelhouse. Okay. All right. I don't have a stop loss for fall. I don't have a stop loss in New Zealand dollar. I'm trading small, and I'm willing to scale into this one down to. I don't think it should go too much lower than 5,500. It shouldn't go too much lower than that. But if we have like dollar strength continuing, I'm in 3 small positions right here. Okay. If this goes lower, I'm already committed to this. I'm going to do a 5,300 and a 5,000. I'll take a 4th and a 5th entry right here. Drawdown wise will probably be, I don't know, maybe a 1 to 2% drawdown. And if I can get this thing, and I don't know if it's going to hit 5,000, but if it does, and I'm in a 1 or 2% drawdown, okay, I can manage the drawdown and then stack my way back up, get these, buy stop levels to get filled, come back to this support, which I firmly believe will get hit, and turn, I could do this. I could take, this trade could be break even. This trade could be a loss. This could be a loss. And I can stack up winner here, and then stack up like 3 to 5 more winners here, right? A bunch of winning trades there. So I can eat these positions and say, okay, I'll take a small loss there, but work my cost basis lower, and maybe get my break even from like 5,300 or 5,250 back up to 56. Take 300 to 400 pips net on the profit trade, but I'm willing to ride this thing down to 5,000. And I know when I say that, everyone's just like, that's crazy. Where's the stop loss at? That's way too much risk. I can never afford to do that. You're probably right. You probably can't, because you probably trade too big. So this is how I trade Forex. I trade really, really small. I give myself wide open spaces to work with. And then when I believe and I see that price is working in my favor, I see bottoming patterns, I see confirmations, then I put a lot more positions in the direction that price is going. Is that a martingale? No. Martingale is a stupid strategy, because all you're going to do is keep doubling in until you lose everything. So that's a stupid strategy. It's scaling in. Okay. And how do I scale in? With like 1 unit different in price size. So it's 10 cents a pip, 10 cents a pip, but it's a unit different, so the broker recognizes it with non-FIFO, and I'll trade micro lots until it adds up to a couple of dollars, and mini lots until I trade half a standard lot or standard lot, and I build it up. So eventually I'm trading for $5 or $10 a pip, make 200 to 300 pips net, and it ends up making a couple $1,000. So I do that a lot, and if I get 10 trades like that for the year, and I can make $30,000, $40,000 in Forex trading safely, I do that almost every single year. My bigger trades, when I really like a trade, I generally can make 20, 30, 40,000 pips, and it adds up to be my biggest year in Forex. I mean, I've made, I don't know, I'm trying to think, for all my managed accounts in Forex, I think I made close to like $2 million in a year in Forex trading like this, and I do a lot of this on probably less than a dozen trades a year. So if I find a trade I really like, I do spend a lot of time nurturing these positions, but I just give myself a lot of space. Okay, I can afford to let the market go against me. I don't want it to, right? But I can afford to trade small and manage my risk. Do I stop out of these trades ever? Yes, but I don't stop out of the entire position. If this went down against me a bunch, then I just close out the worst position and then just re-enter. So I'm willing to take losses along the way if things get really nasty. Because it's silly to hang on to a trade. If I'm down, 500 pips on a trade or 1,000 pips on a single entry, I shouldn't be in that trade. I should get out of that trade. So I do take losses. But when I give myself open spaces and bigger time frames, I usually can work these areas where it doesn't have to stop me out. So anyways, that makes sense. And again, I know if I say that, it could be just, I don't know, people, I've seen like the look of confusion, number one, and just like nobody really gets it. So it's a hard strategy to teach, okay? But it is the most success that I found in the Forex market. Okay, I don't have to look at charts every day. I don't have to sit and care about non-farm payroll. I don't care about any news in the Forex market. I really don't care about the fundamentals either, right? Forex to me is a pure technical market. So you trade the technicals, right? It's amazing how fundamentals fall in line and prices start to go your way, and like all of a sudden the news is all of a sudden supporting the direction the market's going. It's almost as pure technical as you can get. So that's what I trade, and the way that I take it to higher time frames, it's with the higher time frames, I just have less noise, right? So overall risk, generally I'm willing to take on a certain pair. It's like I'm willing to accept like 3%, 4%, 5% drawdown on some. But in order to accept that risk, I do want to make sure that my reward is bigger. So if I'm accepting a 3 to 4% drawdown or 5% drawdown, I expect to have the trade when it's all said and done to hopefully pay me, 7, 8 to 10%. I want my reward to be bigger. I just have to be patient enough to, number one, not trade too large up front. Number two, continue to, work the positions the way that I want to like scale in, not scale in. And I'll say this, I'll make this really simple. Okay. There's two ways the market works. If I'm looking at this market as, okay, this is in a downtrend. Well, if it's in a downtrend and I'm trading the downtrend, great. But if it's in a downtrend that I'm like, I'm already late to the game, I'm not going to chase this thing, I'd be selling it low, I don't want to sell low. So what I do instead is I look at it this way. If this is in a downtrend and it's coming into support, what I do is I'm looking at like, okay, I'll start a trade here, and this would be an anticipation trade. Okay. So what I might do is I might start putting in 1 or 2 anticipation trades. And then what I'm going to wait for is hopefully a trend line break or some type of price pattern. Okay. And then I start to look at adding confirmation trades. That's really what I do. So I'm willing to start really small with anticipation trades, and I start to scale back in with confidence that price can go my way on price patterns and confirmation. Then I start getting the trend lines to break. Then I start getting the oversold conditions with diversions. Then I start looking at a little bit more, okay, right side of the trend line. So if I build small here, add consistently here, and let's say my profit target is back here. Okay, so what do? Well, I manage my drawdown here. So this is where I'm down. I'll put this in red, I guess. So I manage my drawdown in these small anticipation trades, and then I add to my confirmation trades. Does that make sense? So anticipation trades, I trade small for this reason. I don't know where the bottom is. Okay. Confucius say those who, pick bottoms wake up with smelly fingers. So I get it. I got to trade small so I don't get into too much trouble. But once these anticipation trades start to pay out and confirmation trades are also going my way, and this is my profit target, well, these turn into winning trades, and all these turn into winning trades, and I make money. And as long as I keep this side small, I don't get into too much trouble. I keep the drawdown manageable, right? Let's say 1 to 5%, and then I turn the positive side, let's say, 7 to 10%. That works really well. But it's all about this side of the trade. If I'm going to start early, I got to start small, And the argument is, well, Chris, why don't you just not trade any anticipation trades, wait for confirmation? Well, because if I miss the order, or I don't start dollar cost averaging in, early enough, like I might miss the actual entry, or I'm getting in later. So I just because that's like, I still see the structure. If the market's going to bounce off support, I want to be in at support, as opposed to it's already, you know, bounced off support and it's trading, you know, a wave 3 that I missed. So anyway, that's just a bunch of drawing, but you get it, right? All right. EETH is the one that I'm in for Ethereum. That's what I've been using. We're back up to $70. Bitcoin's back up to 97. Oh, big run on old Bitcoin. Cool. Okay. All right. We're good on the Forex stuff for right now. That's where I'm at. That's how I trade it. That is 17 years of trading Forex in whatever, 20 minutes. Does it work? It is the most consistent way that I made money in Forex every year. Does it, you know, does it pay me every month? No, it pays me in a 12-month span. I typically make some really big profits in, you know, let's say 5 to 10 trades over the course of a year. I never like to be forced to take a trade in Forex because if it's not a good setup, I don't want to touch it. So, you know, do I like the dollar stuff? Yeah, I like the dollar, and eventually the dollar is going to be a great trade, right? Right now, the dollar's already been, if you're long the dollar, you're freaking killing it right now, okay? I'm long dollar CAD, I'm long dollar Swiss, I'm crushing those trades. We're going to make a lot of money on those trades. That's great. I'm long Aussie dollar, New Zealand dollar, and I'm early. I know that I'm early, okay? But I'm willing to ride those trades out a little bit longer. I'm willing to see, you know what? I think if the dollar wants to get a little bit stronger here, then the trade I'm looking at here is probably short, or I should say long euro dollar. If this trade reverses, I'm going to get long euro dollar probably pretty heavy. Again, anticipating and then confirming, and then maybe taking a trade on euro dollar that's like, you know, 100 down to 98 down to 96 and take it all the way back to 104 or 105. But I don't want to sell the euro dollar now because it's already at like 102.80, 10300. I'm not that interested in riding this last little stretch down to parity or maybe a little bit lower than parity. I'd rather let the dollar get so overbought and so extreme that it becomes a macro trade that I can follow. And I can make a lot of money on that.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.